Semiconductors have been a growth engine when it comes to the stock market. Today, we're going to take a look at investments that give you exposure to the engine as the whole ship. Right now, we're seeing some weakness across some of those big names like Nvidia as well as Micron, which are down on the day. And the sector as a whole is down currently 0.39%. This is being driven by a mix of different things, geopolitical risk, and some other news catalysts like the oil prices rising, inflation fears, and upcoming earnings, which we'll talk about more later. But this pullback does not mean that there is a lack of demand for these chips. There are going to be periods of profit taking. There's always many different factors that influence the movement of the stock market. But this is a space that you may want to have exposure to in your portfolio. So we're going to be taking a look at some ETFs, and I'll let you know what my positions are looking like. So when it comes to my portfolio, my foundation, my anchor are investments. For example, FXAIX, which tracks the S&P 500. But then I like to have the benefit of those big, strong sales to give my portfolio additional growth, an extra boost, a bit faster, but in a way that I'm comfortable with, that gives me steady, continual growth. Before we get into those ETFs, why do semiconductors matter? It's because these chips are powering everything related to AI, cloud computing, our smartphones, our cars, all different type of servers, things that we're using on a daily basis, even if we don't realize it. These investments have been outperforming the S&P for years now. And the ETFs that we're about to take a look at will have us on track for exposure to those leaders without us having to pick each individual company. Now back to the investments. Let's start with those semiconductor ETFs. We have SOXQ, which is an Invesco semiconductor ETF. It has an expense ratio of 0.19%. A dividend yield of 0.31, a share price of about $92. It gives broad exposure at a low cost. And yes, it will be easy to build up your share size when it comes to this one because it has that lower share price. But that's not all that matters. We also have SMH, which is the VanEck Semiconductor ETF. It has an expense ratio of 0.35%, a dividend yield of about 0.20, and this is a more concentrated fund with heavy weightings into companies including Nvidia and Taiwan Semi. In our last ETF we'll be taking a look at is SOXX, which is the iShares Semiconductor ETF. It has an expense ratio of 0.33%, a dividend yield of 0.28%, and a share price of $518, just slightly lower than SMH, which is currently at about $560. SOXX is market cap weighted across these semiconductor companies, which is going to lead to safer but slower growth because it is less concentrated than SMH or SOXQ. But of course, you're going to see many of those same in the top 10 of all of these funds, like Nvidia, Micron, AMD, and Taiwan Semi. Now let's take a look at some of those differences that matter, that can help you to make your decision on which one is the right fit for your portfolio. I'll use the 5-year time frame since SOXQ has only been around since 2021. So I was reviewing many of these same funds in a live stream recently, and someone asked if I would go with SOXQ because of that lower share price. But I want to make sure to point this out. That lower share price at about $92 and slightly higher dividend yield, as well as the lower expense ratio, does not make up for the performance. Looking at our semiconductor ETF over the last 5 years, SMH is up about 350%, SOXQ is up 276%, and SOXX is up 264%. So when it comes to this area, the choice that I've made for my portfolio is to invest into SMH. And thinking about this 5-year time span, an investment into SMH, $1,000 investment into SMH would be about $4,500 now, while $1,000 investment into SOXQ would be about $3,800. And this is including reinvesting those dividends. When it comes to these two funds, the concentration into the investments when it comes to SMH delivered the strong growth that I was looking for when it came to my new additions that I'm working on when it comes to my portfolio. Before we take a look at my results into my ETF picks, as well as some of the top holdings in them, let's take a look at two broader tech investments that give you exposure to some of these same companies. So we'll be taking a look at VGT, which is the Vanguard Information Tech ETF, and QQQM, Invesco's NASDAQ 100 ETF. Just like with SMH and the other funds, the highest weighting here is going to be into Nvidia. These two ETFs have much lower expense ratios than the semiconductor ETFs. VGT is at 0.09%. and QQQM is at 0.15. So you're definitely going to save on those fees and just get pure tech exposure, not specific to semiconductors only. Looking at the 5-year performance of all of the funds together, we see that when it comes to the semiconductor, SMH was leading. But when it comes to our broader tech names, VGT is up about 135%, and QQQM is up about 100% over the last 5 years. So QQQM gives you that tech exposure, no financials, strictly tech. And VGT is also pure tech. Big names like Microsoft and Apple, semiconductor companies, software companies, no Amazon or Meta or Google when it comes to these funds. A bit more stability than being completely into a fund focused on those semiconductors. Pure tech, VGT, broader tech, QQQ. So I hold two of the ETFs in my portfolio, SMH as well as VGT, both newer additions. Here's a look at how my positions are looking on the day. When it comes to SMH, I have 9.75 shares with a current total gain of just 2.6%. And when it comes to VGT, I have 5.5 shares and I'm down about 2%, but definitely still building into both of these positions. It can take time to get to a place where your positions are deep in profit, but I'm okay sharing at all stages when it comes to my journey. And of course, I want you to know my thought process behind what I've decided to incorporate when it comes to my portfolio. It took me 10 weeks investing $10 daily just to get started towards achieving my first share of having SMH in my portfolio. But I'm okay with that. I don't have to opt for a lower price investment because fractional shares exist. My share size is not going to grow as quickly when it comes to a fund that might be $500 versus one that's $100, but I'm okay with that. That's not what matters. For me, I want the growth, the potential of the investment. I'm not hanging on to or worried about the share price. Now, looking to a couple of those companies in the top 10 of both of these funds, SMH and VGT, I'm going to share a few of my positions. Apple and Microsoft, which are highly weighted into VGT, AMD and Taiwan Semi when it comes to those top holdings in SMH. So these are positions that I've been building on for longer than the ETFs that we just took a look at. When it comes to Apple, I'm currently up about 98%, holding 60 shares. I have Microsoft in two portfolios. This is in my long-term account. I have 6.9 shares, and I'm currently up about 17%. When it comes to those top holdings in SMH, I was already holding positions in Nvidia, Taiwan Semi, as well as AMD before I decided to start to incorporate SMH for additional exposure. But here's a look at my Taiwan Semi shares. I have about 15.6 shares and I'm up 115%. And AMD, 4.75 shares, and I'm currently up about 85%. So I see the potential of the growth that I'm going to get from investing into my ETFs, but I have a few select individual stocks where I'm already seeing strong gains. And when it comes to that top holding in all of the funds that we took a look at today, Nvidia, they have their earnings coming up in just a few days. Next week, Wednesday, I believe. Yes, Wednesday, August 26th, 2026. So this is a company, the largest company in the US. So we have to know that it's going to move the market. Options traders are expecting a 6% swing in either direction once those results are out. So the current share price is $215.22. So we shall see if it pushes back up towards 229 or slips down to 205 once those results come out. Analysts are expecting that the sales and profit will be double year over year, with their data center revenue projected to be about $85 billion, up more than 100%. So looking back, we can see that Nvidia has beat when it comes to earnings over and over again, but that doesn't always mean that that share price is going to push up. Historically, Nvidia has actually fallen the day after each of its last 4 earnings reports. So even strong earnings results can turn into a bit of a sell-off. But overall, analysts are giving it an average of a $300 price target, which is about a 35% upside from where we are currently at $215. So this is an investment that I also hold shares in multiple portfolios, some in my taxable brokerage account, as well as my long-term portfolio. And I'm up about 66% when it comes to Nvidia. So that's a look at how I've been building and some choices that you can make for your portfolio when it comes to gaining exposure to semiconductors or a broader tech ETF like VGT or QQQM. Decide for yourself what matters. Make sure you're weighing the performance, those fees, and not just focusing on that share price. Are you looking for a fund that's concentrated, more balanced? Investing is not a one-size-fits-all thing, but I'm here sharing my journey. I'm letting you know where I stand when it comes to how I'm going about building up my positions. But all the choices that we look at today will give you a way to ride the wave of growth when it comes to semiconductors or technology. Now, I want to hear from you. Make sure to leave me lots of comments and questions. Which direction are you going? Investing into individual stocks like Taiwan Semi and Nvidia, a mix of both like me, what combination of funds give you stability as well as growth? Make sure you like, subscribe, hit that notification bell, hype this video, check out my referral links, join channel membership, use my referral link for the Moomoo Investing app. Tune in live on Sundays, 3 p.m. Eastern Standard Time. Thanks for watching. Okay, bye.